This is the easiest strategy ever. All right, guys, so today we are looking at gold and we're looking at the easiest strategy ever. This can work on any single financial asset. I like to use it on the foreign exchange, commodities, specifically gold, and then on indices too. But for this video, we're going to be focusing on gold. Here you can see prices making a big drop, accumulate, make a big drop, accumulate, big drop, and another big drop here again. So you can blatantly tell that price is making low lows and low highs. This is a downtrend. And then eventually we trade above this high here, the high before this big drop here. I'm running out all these relative equal lows. We trade above the high here. Then here you're going to be expecting price to turn back around and then push up higher again. So retrace or accumulate more orders and then push up higher again. And so the very simplest strategy you would ever look at, it's as simple as waiting for price to drop back down into a discounted price before expanding higher. So let's just take from here. If price is at a premium at this high, then drops, it accumulates, then drops, it accumulates orders, doesn't really give much retracement, but it accumulates orders and drops, then it retraces into a premium, drops, retraces into a premium, drops, expands into a premium, and then drops into a discount. You want it to expand up into a premium again and then drop back down into a discount, ideally into a point of interest, and then look to take price higher. And so this is exactly what we're looking at. It's just that what I did though is I refined my area of interest. So this down close candle was what I was looking at. So let's go ahead and mark it up. This is my down close candle, and then what I'm going to do is I'm going to mark up the kind of 6-week high to the open. I'm going to take that and expand it out to the right. But once price gets down into this area, this is going to be my first point of interest, my very first point of interest. If I see some kind of reversal sign, I'm going to look to take price back up into a premium price. What you're looking at, you're probably thinking, so where is premium? Let's get more data into the screen. Premium is going to be anything above this high here. So now when price gets down into this level, I'm going to be looking to take price to the upside. I'm going to get a reversal sign in here. But don't forget, we're using a larger time frame than the 1 minute time frame for an institutional candle here. See the exact same thing like this, where price turns around here, trades above, creates a down close candle, comes back into it for mitigation, and then we go again. That's exactly what I'm going to look for in the lower time frame. And then when it comes to taking areas of interest to take TP, so just this might help as well actually if I put this on. Okay, cool. So you can see here, look, so this is last week's high. All the candlesticks within these two lines represents last week's data, and then this is Monday today, and so this is what we're looking at on Monday. So what I'm going to do is I'm going to take partial profits of 80% when price runs above this high. This is still a very good high to take TP at, this high here. This is a phenomenal amount of pips. From wherever you enter from to this level, that's about 93 pips. That's amazing. I know we're not looking at pips, but I'm saying that's an amazing amount of pips. You can work any kind of risk to reward within this area here, but I'm not looking to go there. I'm looking to take price to the previous day. And so what I will do is take partials somewhere above Friday's high and let the rest ride, and I would look to take more above the high, or I might get stopped out in profit because I would have moved my stop loss by then. Quick plug in the video, I am doing a massive summer discount on lifetime mentorship, guys. If you want to get involved in that and find out a bit more, go ahead and check the information at the top of the description. Let's get back to the video. So now let's just run this up. Let's just take it one candlestick at a time. We drop into my point of interest, and generally I'm not always in from the very lowest points. I don't always get in from when price is dropping, although that would be ideal. But let's go down to the lower time frame now. So I'm in a 1 minute time frame now. We're in my gray shaded area for where this is my first POI. And look at that, in my gray shaded area, this is where I get a turnaround. Check it out. From this very highest point here to this low, that's my down close candle right there. When price expands above this high, this is when this down close candle is formed. So now my point of interest is always going to be near about the high, my first point of interest, and I got 50%. I missed this. I ended up missing this, you know, this point of interest here, so is what it is. But then price came back down to where the very highest point of my down close candle, and this is where I was looking to jump in with a buy. I believe I jumped in on this kind of stick right here with a buy. I do have my executions. I'll show that to you guys at the end of this video. I jumped in down here, and then my aim was to take it. Like I said, let's go up the time frame again. Let's go to the 15-minute time frame. My aim was to take it to above the previous week's high. So let's go ahead and hit play. And I'm gonna stop. Wait, let's just hit play one more time. Actually, there we go. I think that's it. One more time. There we go. Sweet, lovely. Let's quickly go back down to the 1 minute time frame. Look at this. I entered here. When price expanded and pushed up higher, some people would have moved their stop loss into profit here. Oh, yeah, we've taken out this high now, 1913, Now let's move your stop loss into profit. And look at that, price came back down here. If you had moved your stop loss, you would have been taken out. But this is why I don't move my stop loss. For me, this is more mitigation of the down close candle here. Oftentimes people get taken out when mitigation is taking place. They have the right direction, but they're getting stopped out early because they're moving their stops early. And the thing is, this is a beautiful move. Just from where we enter to here, that's still 23 pips. That's still 23 pips. My stop loss was beneath this candlestick's low, roughly about a 10 to 14. I think it was a 14 pip stop loss. And it was beneath this candlestick here, this candlestick's wick low. I don't know if you can see it. This candlestick's wick low here. People would have moved their stop loss into profit and they would have taken out. Let's say price expanding above the high again. People to move their stop loss, the exact same thing would happen again. This is why I don't move my stop loss early. Give the trade enough time to get the mitigations off, to offload those drawdown positions, and be patient when price is doing so. Then we get the push up, 50-minute time frame. Let's go up higher. Like I said, I wanted to take TP or first partial profits of 80% when price got above this high. So let's hit play. Look at that, we get above the high. And let's just, I'm going to pause it probably right here. Then we get above these highs, this one, that one, and we get above this one. But I wasn't looking on the charts. I wasn't paying attention. When I saw where gold was, gold had already started rejecting just a little bit. So I ended up taking partial profits when price was in this range in here after running out this high already. So I ended up taking partial profits when price started dropping lower, and then the rest of it got stopped out. I could have tried to attempt to go above these highs again, but look, we already ran above that high. Let's go ahead and just mark up this high here. Just to the high I'm referring to at the moment, we already ran above that high and dropped. In my eyes, it's Monday. You can't be doing the most. You can't be expecting price to go above and beyond. If it runs liquidity, get out the trade. Like I said, I wasn't looking at price. I would have taken partial profits above this high here if I was looking at the charts, but I got distracted and is what it is. So now when I go down to the 1 minute time frame, you can see here, when price started dropping lower, I took my partial profits and I believe I got taken out beneath this low here. I wasn't going to give anything up to the markets, especially because we had already taken out this point of interest up here. So now I'm going to go ahead and cancel out of this. I could have been hoping for price to come back up here again. But like I said, it's Monday. Price came close. Imagine I would have been holding. It still would have been decent at least. It's not too far off. But still, I'm going to trade it well. Trade according to my style, which is taking partial profits and letting the rest do the hard work. And so let's go ahead and put my executions on now. Settings, executions. You can see right here. Look at that. So let's go from where I entered. You can see this is where I entered. If I zoom in, I entered the moment on this candlestick here. Okay. This is where I jumped to my buy when price dug into this down close candle. And I took my very first TP. I took my very first TP here on this candlestick low when price started dropping. And then I moved my stop loss into profit beneath this low. And then that's where the rest of it got taken out.